Morning, everyone. Just for the avoidance of any doubt, I'm Mark, and Ffion is currently sitting very patiently in the front row, and I'll be handing the presentation baton over to her very shortly. Excellent. I noticed we've got a countdown clock today, because, as my colleagues will testify, I love a deadline, particularly the whooshing noise they make as they fly by. Anyway, so in this session, as Matt said, we're going to be taking you through the full findings from our latest audio ROI analysis, high-gain audio. But before diving into the detail of what we did and what we found out, I'll briefly set the scene by explaining why we conducted the analysis and what we set out to discover. So, as Matt and others have already touched on today, we've seen a huge increase in smart speaker and smartphone penetration in recent years, which has made audio content more seamlessly accessible in and out of the home, which has helped to fuel growth in commercial listening to record levels. And as we can see in this chart, while broadcast remains the predominant listening platform, the primary driver of growth in recent years has been listening to digital audio services through IP-connected devices, which now accounts for almost half of all time spent listening to commercial audio. And in parallel with this growth in connected listening, as we heard from Charlie earlier, broadcasters have evolved their commercial offering to combine the digital targeting efficiency of these connected platforms with the cut-through and emotional heft of audio advertising. Radiocentre's Speed of Sound report, which was launched at this event last year, explored how this evolving commercial proposition impacts the role and effectiveness of audio advertising. And the analysis identified the unique communications features of broadcast radio and digital audio for delivering against both short and long-term goals, indicating how these complementary characteristics, when used in combination, can deliver cumulative benefits and improved outcomes for advertisers, as outlined here for both demand generation and demand conversion campaigns. And for those who'd like to know more about this, all the details are available in the report on the Radiocentre website. In that context, the headline objective for this study was to develop ROI data to underpin these hypotheses and demonstrate the incremental value of using multiple audio formats in combination for both short and long-term goals. Specifically, we also set out to understand how multi-platform audio can be used to bolster total campaign ROI, and within this develop best practice guidance on how these effects can be maximized. So to deliver against this pretty challenging set of objectives, the first and most important requirement for us was to procure access to a robust and credible data set to analyze. And thankfully, as we embarked on this project, WPP Media, Thinkbox, and Ubiquity had recently published their award-winning Profitability 2 study, which contained detailed ROI data for a range of media channels, including, helpfully for us, a substantial number of audio campaigns. And as the originators of this project, we're grateful to Thinkbox, not that they're watching, but we're grateful to them for allowing us access to this excellent data set and introducing us to the brilliant MMM team at WPP, who we briefed about our target outputs from new analysis with a single-minded focus on the audio elements within this data. So to tell us more about the data set, how it was analysed, and reveal some of the key findings, please welcome to the stage Ffion Turner from WPP.
Thank you, Mark. So as Mark said, I'm going to take you through some of the method and some of the outputs from this study. Hopefully, most of you in the room will be aware of our work with Thinkbox, Essence Mediacom, Wavemaker, Mindshare, Ubiquity, and Game Theory on our Profitability 2 study. If you've missed it for some reason, definitely add it to your reading list, but I'll give you kind of a very brief summary of what the study was. So it's the first of its kind meta-econometric study. So it covers 141 brands, of which 60% of the brands included in the study had spent on audio, which gives us a great base to work from. It covers £1.8 billion of investment across 14 different sectors and 10 different media channels. Now, those 10 different media channels, I should say that audio at this point is measured at an aggregate level, so at a total level. And the reason for that is that it hasn't been possible due to either spend levels to break that down into broadcast radio versus digital audio, or the trend really isn't there to do that at this point. But of course, we will talk about how we've managed to do that with this study. So We subjected this piece of work to kind of quite a rigorous 5-stage analysis. I'll take you through each stage and the findings as we go. So the first one was relatively straightforward, was to mine that profitability 2 data set for the audio results. So just a couple of definitions before I move on. So we're going to look at both the full term, so that's up to 2 years post-activity, and the short term, so that's kind of 3 months, 13 weeks post-exposure. So firstly, across the 141 brands included in Profitability 2, we've got an average all-media ROI of £4.11. So that's £4.11 return in that longer term, so that's up to 2 years. You'll notice radio highlighted in the green. So that performs really well with 21% above the average media there at £5. If we focus now on the short term, it's still a great story for audio, and actually, if anything, even a better story for audio here, performing really strongly in the short term, 32% above the all-media average of £1.87. But we wanted to go a step further, as Mark explained at the beginning, and we wanted to create what we're calling a multi-platform audio data set. So we needed to go back to those 84 brands that were included in Profitability 2 and understand if we could mine the data further to be able to split out broadcast radio and digital audio. And this is what we were able to do. So of those 84 brands, we had 7 brands where the spend level allowed us to isolate the impact of broadcast radio versus digital audio. So they covered £148 million of investment across 4 different sectors. And the pie chart shows you their spend breakdown. So they spend about 15% of their budget on audio, with 2/3 into broadcast and 1/3 into digital audio, sorry. What I should note here is obviously these 7 brands do skew to slightly higher investment brands into audio, but we definitely can feature that as a feature and not a bug, because only because they invest so much money into audio, it allows us to break this down to understand the relative efficiencies between broadcast radio and digital audio. So we wanted to understand that relationship between broadcast radio and digital audio, and then apply that to that headline audio ROI that we shared earlier on in the first section. And again, we're going to look at that between the full term and the short term. So long term to begin with, and then we'll talk about the short term. So looking at the relative difference between broadcast radio and digital audio, so the average ROI of £4.11, both digital and broadcast sit in the top 5, actually in 3rd and 4th, next to each other. So a really strong performance for both digital and broadcast radio here. And if we focus on the short term, actually we see an even stronger story with digital and broadcast radio in joint 1st and 2nd. And if you'll notice from both charts, digital audio is ahead of broadcast radio, and there's probably a couple of different reasons at play there. Obviously within digital audio, you've got the slightly stronger targeting efficiencies. If you remember from the pie chart, there's a greater level of investment into broadcast radio. So as we know, as you invest more, typically the ROI will fall over time. So broadcast radio is potentially affected more by diminishing returns here. So that digital audio is a really strong ROI, but from a lower level of investment. But I think anything that you take from this chart is that digital audio does command its price premium because it does pay back, both pay back. But of course, you can't plan by ROI alone because it doesn't tell you how much headroom there is in each channel. So what we wanted to do now was to look at the investment levels and understand how much more we could push investment in both broadcast and audio. But just to take you through kind of a step-by-step level of how we did that, I'm just going to kind of roll it right back to talk through how we would budget set. So as you invest more money, the profit generated increases up to a certain point. So the average ROI begins to diminish as you invest more. So the average ROI here is total profit divided by the investment. But really, you can't budget set by average ROI. What you really need is the marginal ROI. And that tells you the return for the last pound invested. So let's take this example here of this brand investing 300K. So they're returning a profit of just over £1 million with an average ROI of £3.50, and then that last pound invested is generating a return of 2. Hopefully that makes sense. So we've used this to then understand how we should be flexing our investment between, or how much headroom there is in both broadcast radio and digital audio. So this table here shows you for each of the marginal profit returns how much more you could invest. So if we were to spend up to the point on the curve where marginal ROI equals £1.50, we would invest more in both broadcast and digital audio. Now, arguably, the furthest you would push this is when your marginal ROI equals 1, because anything below that and it's not paying back. And at this point, you could effectively double your investment into these channels. So the final stage was to understand how our learnings from the marginal response curves impacted our investment decisions into audio and that split between broadcast radio and digital audio. So what we did was to look at different scenarios where we had investment of, in both extremes of 100% into broadcast and zero into digital audio and vice versa, and then looked at 10% increments of how that would adjust your payback. And from this, we wanted to understand how we would maximize audio's impact in this. But to take you through this finding and a summary of the overall research, I'm going to hand back to Mark.
Thank you. Thanks, Ffion. That was a brilliant description. So the final stage of the analysis, just outlined by Ffion, reveals significant opportunities for advertisers to exploit audio's marginal ROI headroom and boost total campaign short-term ROI by allocating a greater proportion of total media budget to both broadcast radio and digital audio. That's what I should have been saying on that chart. As revealed in this chart, which shows the increase in total campaign ROI relative to audio's share of total media spend. Broadly speaking, total campaign ROI grows when audio's share of total media spend is increased, delivering maximum impact when audio is allocated to 25% share of media spend. So this is further validated through triangulation with other evidence. So firstly, the original RAB ROI multiplier. Anyone in this room remember that from 2013? That demonstrated that overall campaign ROI is optimized when radio holds a 20% share of total media spend. And secondly, from an audience perspective, IPA Touchpoints demonstrates that multi-platform audio accounts for a quarter of all time that adults spend with media content in the UK. The data also hints at a potential source of budget for increasing audio's share of total campaign spend in this way. So based on the assumption that there's likely to be the greatest flexibility and room to maneuver within the budget line that nowadays accounts for the largest proportion of total media spend, it makes sense to consider pure play online as the potential source of spend to upweight audio to the necessary level. And beyond this inferred flexibility, there's specific ROI evidence to support such a shift, as we can see here. When comparing short-term profit ROI, audio formats outperform most pure-play digital channels with only generic PPC competing. And over the full term, the difference is even starker, with both broadcast and digital audio delivering ROI around about 30% higher than any pure-play channel. Now, taking the decision to shift budget into audio from other media also has an additional benefit beyond just amplifying total campaign ROI. This is because it also creates the headroom to allow you to maintain optimal use of broadcast radio within a campaign while augmenting its effects with the addition of digital audio. And our multi-platform audio dataset supports using digital audio in this way as a supplement to, not a substitute for, broadcast radio, revealing how the two formats combine to maximize total campaign ROI. And here's what it reveals about combining them to best effect. Now, acknowledging the importance and influence of individual campaign dynamics, The data indicates how multi-platform audio's impact on headline campaign ROI can be augmented by balancing the share of total audio budget allocated to each of broadcast radio and digital audio. And as this chart suggests, audio's headline effect can be maximized by increasing the share of total audio budget allocated to digital audio formats to 30%, with the remaining 70% being allocated to broadcast radio. This is when audio overall receives 10% or more of total media spend. Now, I know a lot of people have been asking for this sort of information for a long time, so I should make a note that this data is very much broad headline guidance, not categorical rules. And it's crucial that it's reviewed and adapted on a case-by-case basis, subject to relevant campaign factors, to ensure that the most appropriate balance between audio formats is attained for each campaign. To tailor the guidance for individual audio campaigns in this way, we suggest that advertisers consider 3 factors when developing the specifics of their plan. Firstly, campaign objective. For example, whether this is a brand or performance-led campaign, if the objectives are more focused around efficient short-term activation, then this may suggest an upweight to digital audio. And for more information about the complementary characteristics of broadcast radio and digital audio relevant to generating and converting demand, I'll refer you back to Radiocentre's Speed of Sound report that I mentioned earlier. Second factor, target audience should also influence how audio budgets are apportioned across formats. Now, to help assess this, I'd recommend taking a look at our new, just launched here, new commercial audio audience analyzer tool, also launched and available on the Radiocentre website from today, I think, which provides advertisers with easy access to commercial listening information by audio format, filtered by audience age and gender. So here's a brief illustration of the data it provides, starting with share of total commercial listening by format for all adults. And here, ta-da, is the same data for 15 to 34 men, which reveals how digital audio formats, those are the segments in the lighter shade of blue, account for a much greater share of their listening. Simply put, this suggests that it may be appropriate to upweight digital audio spend for campaigns targeting younger men. Finally, budget decisions are also likely to be influenced by the relevance of individual audio formats to the headline media strategy. And Charlie sort of touched on this earlier. For example, if the campaign is seeking to reach audiences in a particular context, be that editorial, physical, or emotional. And in this instance, Radiocentre's Audio Need States Navigator tool provides a helpful one-stop shop for listener-related stimulus and data of this nature. So please check that out as well. I hope you're writing all of these follow-ups down. And finally, in the context of setting audio budgets, we've already heard from Matt how UK broadcasters provide access to the vast majority, around 90% of commercial audio listening. But it's also important to acknowledge, especially when developing detailed activity plans for digital audio, how, in addition to providing sole access to broadcast radio audiences, commercial broadcasters also represent the majority, around 70%, of commercial listening on digital platforms. Okay, so that's all the detail. Here's a quick reminder of the key points to take away. Firstly, at a headline level, the analysis reveals how broadcast radio and digital audio services play complementary roles for advertisers and, when used together, can enhance the impact of multi-platform audio on media campaign outcomes. And we see this firstly in terms of how multi-platform audio delivers both short and full-term ROI significantly higher than the all-channel average. And secondly, when broken out individually, both broadcast radio and digital audio each significantly outperform the all-media profit ROI average in both the short-term and the full-term. And this industry-first audio data comparison fully supports digital audio's price positioning relative not just to broadcast radio, but to other media as well. And thirdly, acknowledging the competition for budgets from the digital sector, it's notable that ROI generated by both audio platforms is substantially greater than that measured against pure-play digital advertising media. And again, this holds true in terms of both short-term and especially full-term ROI. And more broadly, we saw how when budget is allocated from other media to multi-platform audio, with an appropriate balance between broadcast radio and digital audio, total media campaign ROI can be boosted at no additional media cost. So, having appraised these findings, now it's time to consider how the learning might be applied in the real world to help generate better campaign results. So here's the thinking we've developed along these lines, presented in the snappily titled Radiocentre 3-Step Guide to Amplifying Campaign Effects Using Multi-Platform Audio. And the first step to getting the most from its use in the media mix is to be more ambitious with the budget you allocate to audio. This analysis demonstrates significant advantages available to advertisers who exploit audio's marginal ROI headroom and allocate almost any proportion of budget, even 5% of total media budget, to both broadcast radio and digital audio, with the opportunity to boost total campaign ROI maximised when audio is allocated to 25% of media spend. The second best practice step towards optimising total campaign ROI is to use digital audio as a supplement to, not a substitute for, broadcast radio. And in this context, the study indicates how multi-platform audio's impact on headline campaign ROI can be maximised by identifying the most appropriate budget split to each format. And based on the outputs from this analysis, Radiocentre's rule of thumb suggests increasing digital audio's share of total spend to around 30% when the headline audio budget hits 10% or more of total media spend. And acknowledging the importance and influence of individual campaign dynamics, it's really important to consider and tailor this guidance to reflect the specific nature of the activity being planned. And as detailed earlier, please see Radiocentre's Speed of Sound report alongside our commercial audio analyzer tool and audio needs states navigator for further context. And lastly, the data contained in this report demonstrates the value of more precise measurement and analysis in unlocking the full potential from audio media spend. So in this context, we'd encourage advertisers to involve their media mix modelling capabilities to be able to identify the individual contributions of broadcast radio and digital audio within the context of the wider media mix. And a good start point from an audio perspective is to use post-campaign reports from Jet and now Jet Digital to ensure that modelling is built on the most accurate and granular audience delivery data available on a campaign level. So there it is, our 3-step guide to amplifying campaign effects using multi-platform audio. And on that note, it's sort of time to bring this session to an end. But before I do, a couple of things I need to tell you. Firstly, a reminder that the detailed high-gain audio research report and commercial audio audience analyzer are now up and running on the Radiocentre website. And if you've got any immediate questions you'd like to discuss before reading the report, please come and grab me, have a chat at the end of the conference. So that's it, folks. Thanks again to Ffion and the rest of the WPP team who did a brilliant job, and thanks to you all for listening. And now, back to Matt.